What are options? Options trading is buying or selling the option to buy or sell a certain stock at a predetermined price by a predetermined date. Let me break that down. Options trading entails buying or selling the option to buy or option to sell a stock at a predetermined price, which we call the strike price, on or before a predetermined date in the future, which is the expiration date. And this is usually for 100 shares of that stock. So you see here that creates 4 different scenarios. Either you buy the option to buy, which means you pay a premium in exchange for the right to purchase 100 shares of a particular stock at the strike price by the date of expiration. Or you sell someone else the option to buy, which means someone else pays you a premium in exchange for the right to purchase 100 shares of the stock at the strike price by expiration. This means you would be obligated to sell the stock at that strike price on the date this option expires. Or if you buy an option to sell, you pay a premium in exchange for the right to sell 100 shares of that stock at the strike price upon expiration. And finally, you could sell someone else the option to sell, which means someone else pays you a premium in exchange for the right to sell 100 shares of the stock at the strike price on the predetermined expiration date. And in this case, you would be obligated to buy the stock at that strike price on that date. So now that you get the idea, let's use some options lingo. When you buy, you pay the ask price, and when you sell, someone else pays you the bid price. The option to buy is a call, and the option to sell is a put. When you're buying a call, you call it a long call, and when you're buying a put, it's called a long put. When you're selling a call, it's called a short call, and when you're selling a put, it's called a short put. So now you kind of get what options are, right? So it'll probably help now to take a look at what these look like in practice. How do you even use options? If you buy a call, you're betting that the stock price will rise above the strike price by the expiration date, in which case you have the option to buy at the strike price, lower than the current value of the stock. You could then keep the stock or sell it and make a profit. If you sell a call, you're willing to bet the stock will not rise as high as the strike, so you make a premium in exchange for taking on that risk. However, if the stock does rise above the strike price before the expiration date, you would be obligated to sell at that lower price. If you buy a put, you're betting that the stock price will fall below the strike price by the expiration date. And in this case, you have the option to sell at the strike price, which is higher than the current value of the stock. Finally, if you sell a put, you think that the stock price will stay at or around the current level, or maybe even rise higher by the time the option reaches expiration. So you make a premium from someone who wants the option to sell the stock at the strike price if it goes below that strike price. But if that happens, you will be obligated to buy the stock at the strike price, so you'll have to purchase the stock for more than it's worth. I guess as you can see, options trading is really complicated, and to make it even more complicated, you could buy a call and sell a call at the same time in the same transaction. This is called a vertical call spread, and this is a way to mitigate your risks, but at the same time you're putting a cap on your potential rewards. So there are all sorts of option strategies, some that are super risky, some where your maximum loss, you're capping that at a certain amount. So anyway, I hope that you join me later to talk about finance and investing and real estate and all things money. This is going to be a series called Sips and Tips, where we drink champagne remotely and we discuss investment strategies. Sips and Tips. I think it'll be really fun, and I look forward to just continuing this conversation because I think it's really important, and I also really love talking about money. So see you next time.